In today's episode, I'll talk about two interesting stories. In the first story of the day, I'll talk about how cryptocurrency has changed drastically after Donald Trump has taken over as the US president. And in the second story of the day, I'll talk about the natural gas space of India with a very specific focus on what's exactly happening in the space of CNG or compressed natural gas. Welcome to the Daily Brief show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy for you to understand, yet one level deeper as compared to your traditional news channels. I'm your host Anurag Bansal, and today is Tuesday, the 4th of March. Just last week, the global cryptocurrency market was in a very shaky space. When Donald Trump won the US presidential elections late last year, major coins hit all-time highs, which reflected a wave of optimism throughout the market. But then, prices went sideways and slowly began to drop. Now, by last week, they were in a complete rout of sorts. Bitcoin, for instance, was almost 25% below its all-time high, which it had hit just about 1 month ago. And then Donald Trump surprised everybody with two posts on Truth Social, which is his own social media platform. In these posts, he announced that his government would form something called a National Strategic Crypto Reserve and would hold certain coins like Bitcoin, Ethereum, XRP, Solana, and Cardano. And the moment he mentioned their names, their prices obviously shot up. Now, you could see this happen almost in real time. But the question here is, what do these social media posts really mean in practical terms for someone like you and I? The simple answer to this is that we don't really know yet. They carry absolutely no legal force on their own. They're just online statements, even if they come from the President of the United States. But still, they mark a huge shift in the way that the US government talks about regulating cryptocurrencies. See, not too long ago, the American government under Joe Biden had taken a very different approach to this. Joe Biden's team wanted to handle cryptocurrencies with a little bit of extra caution. They definitely saw potential in the technology, but they were also worried that people might get hurt if the market was not properly regulated. So Joe Biden chose Gary Gensler to lead the Securities and Exchange Commission, or the SEC. Now, Gensler believed that most crypto tokens were like stocks and bonds, which is basically securities. And if a token was a security, it also fell under SEC's rules and needed the proper permissions and oversight that other securities also required. Now, Gensler based this idea on an old Supreme Court case from 1946 which dealt with orange orchards. Now, the court had decided at that time that if you gave money to a project hoping to profit from someone else's efforts, that was effectively an investment in a security. Now, Gensler took that logic and applied it to many cryptocurrencies, giving his agency the power to watch over crypto projects and take legal actions if needed. Now, under him, the SEC investigated dozens of cryptocurrencies from big exchanges like Coinbase to token issuers like Ripple Labs, which by the way had launched XRP. And at the same time, the Biden administration was open to some parts of crypto's underlying technology. They wanted to create a central bank digital currency, or CBDC, which would be a digital dollar issued by the government. They also allowed big financial institutions to create Bitcoin and Ethereum exchange-traded funds, or ETFs. So in other words, under Biden, the government tried to make crypto less wild and a little more boring, fitting it nearly into existing structures like banks and regulators. But then came Donald Trump and entirely flipped the script. As soon as he became president, he signed an order banning Biden's idea of a CBDC and promised full government support for regular cryptocurrencies instead. He also suggested creating the National Strategic Crypto Reserve, which is that project which is referred to in his Truth Social posts. Also, by the way, once Trump came in, Gary Gensler left the role. Trump chose a lawyer and a crypto supporter named Paul Atkins to take over at the SEC, though Atkins still needs an official confirmation to be able to do this job. But even so, the SEC has already begun dropping or pausing its investigations into big crypto exchanges and individuals, including Coinbase, Gemini, OpenSea, Uniswap, and even Justin Sun, which is the founder of Tron. For your reference, some people had noticed that Justin Sun had invested a large sum of money of about 75 million US dollars into a Trump-linked cryptocurrency company, and they wondered if that had anything to do with the SEC's sudden change of heart here. Trump, by the way, also launched his own cryptocurrency right before he stepped into the presidency role. He called it the official Trump coin, and his wife also created something called the official Melania coin very soon after that. Now, these are examples of meme coins, which are basically novelty tokens that do not really have any real underlying project or utility. The SEC then said that these coins were outside its control because people who buy meme coins do not really expect any profit as such. They are more like collectible items or like trading cards, so to speak. Also, by the way, for your reference, all of this that I'm talking about has happened in just the last 2 months or so. The US government has gone from being a tough watchdog to actually now becoming a cheerleader of sorts for crypto. Donald Trump is apparently even hosting a White House crypto summit very soon, which is like a big celebration of cryptocurrencies. Also, the new idea that has caught everyone's attention right now is the National Strategic Crypto Reserve. Now, this idea has been floating around at various levels of the government, not just in the White House right now. More than 20 states in America have discussed holding crypto in their own reserves or investing pension money into it. But still, currently almost nobody is sure why a government would want to keep a crypto stash in the first place. Some people say that it might protect the country from inflation or economic uncertainty in the same way that gold reserves do. But the others suggest that it sends messages to the crypto community that the United States is open for business here. There is also a strategic angle to this. If another country were to take control of a large amount of any crypto network, it could possibly influence how that network works. And by owning some share of it, the US could actually stop that from happening in the long run. But that said, none of these explanations have been formally confirmed by Trump's team or anyone in the administration. We also do not really know how the government would build this reserve in the first place. One idea seen in a proposal called the Bitcoin Act, which did not, by the way, pass last year, was to create vaults and buy a set number of bitcoins over a few years. The government would then hold these bitcoins for decades. Another possibility is that the government simply keeps any cryptocurrency it seizes in criminal cases, such as from drug busts. That would be an easy version to set up without much of legal trouble here. The more complicated approach, though, would be for the government to spend taxpayers' money on directly buying crypto from the open market. Usually speaking, the president cannot really decide that on his own because Congress controls how this money is spent. But that said, Trump might try using something called the Exchange Stabilization Fund, which is sort of like America's foreign currency reserve, in order to hold crypto. That would be controversial for sure, and it might spark a huge legal and political fight. But right now, these plans are mostly just talk. There is no clear timeline or an official plan on how the government will create or manage this reserve. The idea might even face some serious legal barriers. Some people also question if it's a smart economic move, since cryptocurrency prices are famously unpredictable. What we do know is that the US has made a big policy pivot. The country which was once viewed as the biggest obstacle to crypto's growth is now actively supporting it. If the US truly moves forward with adding crypto to its reserves, other countries might feel pressured to follow it as well. And in many ways, it is very crazy to think that a technology which was once embraced mainly by anti-establishment online communities is now such a major part of American policy. In a very, very short span of time, the landscape has changed dramatically, and it may continue to evolve in ways that we cannot fully predict. We'll all definitely have to wait and see if the National Strategic Crypto Reserve becomes a reality or it does not. But this sudden turn from caution to outright enthusiasm of sorts has already left a big mark on the global crypto scene, and it could further drive shifts around the entire world. With that, let's move on to the next story of the day and talk about the rapid growth of compressed natural gas, or CNG, in India and all the challenges that come with it. But before I get into the details of all of this, let's first quickly understand the big picture of what's happening here. See, India is trying to move away from relying so much on coal and oil, which are highly polluting, as all of us already know. We basically want to switch to renewable sources like solar and wind, but building this new infrastructure quickly enough to meet the energy needs of more than a billion people isn't as simple as you can rightly imagine. Now, during this in-between period of sorts, the government sees natural gas as a great solution that can help reduce pollution and also cut dependence on imported crude oil until, of course, we fully establish our green energy systems. Now, at this moment, natural gas makes up around 6.4% of India's energy mix, which is, of course, very small as compared to coal and oil. The government wants to nearly double this share to around 15% by the year 2030. But that said, there are still big hurdles along the way. For starters, India still depends on imports for more than half of its natural gas, where we lack the pipelines and other infrastructure to smoothly distribute gas across all regions, and electric vehicles are also catching up as a rival technology here. Also, another thing is that people wonder whether CNG is really the best answer or just like a stopgap arrangement until EVs become more affordable and convenient. But even with these doubts, CNG's rise in India has been fairly remarkable. In 2016, for example, there were about 2.6 million CNG vehicles on Indian roads, and by 2025, that number had nearly tripled to 7.5 million. And this means CNG vehicle segment grew by around 12% every single year. In January 2025 alone, to give you context, CNG car sales were up 50% as compared to the same time last year, and it almost outpaced every other type of fuel in terms of growth. Now, people very frequently ask why CNG has taken off so quickly, and see, there are several reasons for this. One big reason is that CNG is often cheaper than petrol, so drivers of, say, auto rickshaws, taxis, and even personal cars sometimes end up saving a lot of money by switching over to this. One more reason here is that the government has encouraged CNG use with certain subsidies and tax breaks. On top of that, it is also getting easier to find CNG stations nowadays. A few years ago, for example, it was a huge struggle to locate a refueling station. But today, there are more than 7,400 stations that are spread across both major cities and smaller towns of India. And these, of course, have also cut down on the long queues that used to form at the few stations that existed. And finally, car makers have also responded by offering more CNG options than they did before. See, until very recently, you did not really have too many choices if you wanted a CNG car. But today, you can actually pick from more than 30 models that are available in the market. And these, by the way, include hatchbacks, sedans, and even commercial vehicles for that matter. And on top of that, the technology behind CNG vehicles has gotten better with lighter tanks and better mileage, which makes them even more appealing to people. And because of all of these trends put together, CNG is now starting to reshape India's vehicle market. Somewhere between 10 to 20% of newly sold passenger cars now run on CNG. Large commercial vehicles, including city buses and trucks, are also turning to CNG in order to reduce both costs and emission. Their share currently sits at around 10 to 11% and is still climbing, especially among fleet operators who are looking for savings on fuel. Then there are, of course, auto rickshaws, which are one of the biggest groups of CNG users. At this point in time, about 28 to 29% of auto rickshaws are running on CNG. Moving on, two-wheelers though have been lagging behind in this race, and this is largely because fitting a CNG tank on a small vehicle is fairly tricky, and refueling stations that cater to two-wheelers are not really as widespread as the others. Of course, some minor efforts are being made to address this, but progress is fairly slow here. But despite all of these success stories, CNG still faces major roadblocks. One of the main issues is cost. See, since a big chunk of our natural gas is imported, local CNG prices can really go up or down if global gas prices fluctuate. For several years, the government has controlled the cost of some domestic gas by using what's known as the Administered Pricing Mechanism, or the APM. Now, under APM, certain fuels produced within India were priced lower than global rates, which protected consumers from big price swings. But that said, imported gas stayed at a higher market price. In Jan 2025, the government reduced how much APM gas was allocated to CNG suppliers, which means that those suppliers had to buy more imported gas. And that, of course, pushed CNG prices by a few rupees for every kg, making the gap between CNG and petrol less prominent. If the government now continues to shrink APM allocations, CNG would definitely become even more pricier, which may slow down its growth. One more significant challenge here comes from EVs, like I mentioned, which is of course like a rival technology here. While the central government and various state governments have cheered on CNG, they are also putting a lot of effort into promoting EVs or electric vehicles. Many states now offer incentives for people to buy electric three-wheelers, which by the way have traditionally been very quick to switch to CNG. And this leads to a bit of confusion for potential buyers because they see both CNGs and EVs being championed by the government. They might not really be sure if spending money on a CNG vehicle today will still make sense tomorrow if electric technology improves rapidly or gets more support from the government. EVs, by the way, definitely have strong points like lower running costs, but it is also true that they usually cost more to buy initially and rely on charging stations that at least till now are not as common in India as regular fuel pumps. But even with these obstacles, electric car sales rose by 32% in January 2025, and electric two two-wheelers are also beginning to trend upwards. Over time, as charging networks expand and battery prices drop, EVs might actually become more competitive and could even overtake CNGs in popular vehicle categories. The growth of CNG, by the way, also depends heavily on infrastructure. It is true that India has a lot more CNG stations right now, but some cities still have too few to handle local demand. It takes a lot of money and time to build additional stations and expand a network of gas pipelines, and the global market for gas can also sometimes be volatile, like I mentioned. But that said, the Indian government remains committed to make sure CNG continues to grow. Officials have talked about bringing natural gas under the GST, or the Goods and Services Tax, which might simplify taxes and help keep CNG costs lower. There are also incentives in place for commercial vehicles that use CNG. As pipelines and stations spread to more parts of the country, especially in southern and eastern cities like Chennai, Hyderabad, and Kolkata, CNG could actually see an even bigger wave of growth. But for now, CNG definitely stands out as a cleaner and a more cheaper choice. And the fact that CNG car sales went up by 50% in January 2025 alone is great proof that many people are seeing it as cost effective and a reliable form of fuel. It cuts down some of the pollution caused by petrol and diesel, and it seems to offer a good balance while we keep building our green energy infrastructure. But there's a big question mark around what will happen after the year 2030. Now, CNG might remain a major player, or it could actually slip into a smaller role if two things happen. First, if rising gas prices erase its cost advantages, and second, if EVs or electric vehicles become cheaper to buy and faster to charge, and as a result, easier to own. Now, of course, no one knows for sure how quickly the EV ecosystem will mature or whether global gas prices will swing upwards too much. For the moment, though, CNG is definitely a central part of India's attempt to balance affordability, practicality, and pollution control in its transportation sector. CNG serves as a great bridge between the coal-heavy present and the renewable-heavy future that we want, but just how far it will carry us really depends largely on the cost of natural gas and the speed at which EVs improve. Now that brings us to the end of the two stories of the day. With that, let's move on to the final section of the day, which is the quick news headlines. First, Hindustan Zinc, which is a Vedanta Group firm, plans to double its metal production from 1.1 MTPA to 2 MTPA by the year 2030. This is driven by rising demand from India's steel and infrastructure sectors. The company reported a 32% year-over-year increase in consolidated net profit to 2,678 crore rupees for Q3 of FY 2025, up from 2,028 crore rupees in the same period last year. Second, Adani Group has revived plans to invest $10 billion in US energy security and infrastructure projects, potentially creating as many as 15,000 jobs following Donald Trump's re-election. The move comes as US authorities escalate investigations into Gautam Adani, with New York prosecutors unsealing bribery charges in November and the US SEC probing a securities fraud case. Adani has denied these allegations, by the way, and has called them baseless. Third, and the final one for the day, the Indian government has approved 1.22 lakh crore rupees, or 97% of the 1.25 lakh crore rupees allocated under the Special Assistance Scheme for FY 2025, which provides interest-free loans for 50 years for states. Originally allocated 1.5 lakh crore rupees, the amount was later revised downwards in the latest union budget. Of the approved funds, 55,000 crore rupees is distributed based on states' share of central taxes, while 95,000 crore rupees is linked to reforms including tourism development, vehicle scrappage, and industrial growth. That's all the news and stories I have for you today. I hope you enjoyed this episode and maybe learned something from it today. This is your host Anurag Bansal signing off. I'll see you in the next episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.